Today, we're taking a deep look inside Bill Gates' Stock Market Portfolio 2020 Updated. Quiz question: how much money did Bill Gates earn last year? If you guessed $4 million, then you are correct. Make sure to watch until the end because you will definitely want to add some of these high-paying dividend stocks to your portfolio. Bill Gates is known as a successful business magnate, software developer, and philanthropist. In addition to all these qualities, he is also an astute investor. As the world watched the current situation unfold, the Bill and Melinda Gates Foundation was making big Wall Street bets, pouring hundreds of millions of dollars into U.S. tech giants like Apple, Twitter, and Amazon, and more. The Bill and Melinda Gates Foundation owns several highly profitable companies with sustainable competitive advantages. The trust is investing over 45% in the financial services sector and has major holdings in industrials and technology sectors. Many of the stocks are also dividend payers and grow their dividend payouts over time, like the dividend aristocrats. Now, let's take a look at the stocks Bill Gates owns to prepare himself for his investment future. Stock number 1, Berkshire Hathaway Incorporated. Berkshire Hathaway stock is the largest individual holding of the Gates Foundation's investment portfolio, and it is easy to see why. It accounts for 47% of all of Bill Gates' portfolio. And it is safe to say the money is in good hands as Berkshire is under the stewardship of Warren Buffett. Warren Buffett is a well-renowned investor and is considered to be one of the greatest investors of all time. It can be said that his close relationship with Bill Gates is the biggest contributor to Bill Gates entrusting the most substantial chunk of his fortune into Buffett's company. Warren Buffett, as the head investor at Berkshire Hathaway, decides which companies to invest in. Berkshire is a global giant. It owns and operates dozens of businesses with a hand in nearly every major industry, including insurance, railroads, energy, finance, manufacturing, and retailing. Companies like Duracell, Geico, Dairy Queen, and the likes are owned outrightly by Berkshire. They also have major stocks in many other big-name companies, such as COCA-COLA, Wells Fargo, Bank of America, Delta, IBM, and several other great companies. Bill Gates is aware that Berkshire is well diversified in amazing stocks. So, when he invests, he becomes an owner in these outstanding companies. Well, when you own investments in the company considered to be the best investment company, you know you can't go wrong. Berkshire, however, doesn't pay dividends to their investors. But why should they? They guarantee a high return on every investment made by their investors. Stock number 2, Waste Management. This is another lovely move by Bill Gates' foundation. You see, to have a 9.9% of your portfolio in waste management is a genius move. Let me tell you a little about Waste Management. Waste Management is a company that Warren Buffett himself describes as a moat. What this term simply means is that Waste Management has an impenetrable competitive advantage, which gives them the power to influence the industry. They provide waste removal and recycling services, which includes transfer location of wastes, landfills to deposit waste, and much more. They provide services to over 21 million customers across the United States and Canada. Why I believe this is a very smart move is because it is a highly concentrated industry, with only a few companies controlling the majority of the market, as I earlier explained. Another essential factor to note is that the waste management industry is not directly affected by a crash in the stock market or the economy, because people would need to get their wastes disposed regardless of the situations in the stock market. They offer a dividend yield of 2.2%. They have a robust business model that accounts for their ever steadily increasing dividend yield. Stock number 3, Canadian National Railway. This is another very interesting choice to have. You see, The Canadian National Railway is the only company that has a railway line that extends across 2 countries in North America. It has a massive rail network, which includes more than 19,000 miles that span Canada and the U.S. They offer a full range of services including rail, intermodal, trucking, warehousing, and distribution. It makes up 7.7% of his total portfolio. You may now be wondering, why does Bill Gates own stock at this company? The answer is a word I told you was popularized by Warren Buffett: moat. You see, this company enjoys a lot of monopolistic advantages, as the railway industry is one industry that is so hard to get into for many aspiring companies. Any company that wants to enter into the industry would have to set up rail networks that could run for several thousand miles and will face a lot of issues in getting that done. And as such, CNI cannot be overrun by any competitor in the nearest future. They have been increasing dividends for a long time. They currently offer a 2% dividend yield on investments. The company is one of the best dividend growth stocks in Canada. Many investors look away from the railway industry as it has been considered as boring. But with the returns CNI offers, boring can be beautiful. Stock number 4, Walmart Incorporated. One thing to observe in the investments Bill Gates makes is the fact that he always looks to invest in companies with competitive advantages. Walmart is another excellent example of a company with durable competitive advantages. It is the largest retailer in the U.S. with annual revenue above $500 billion. The company has come to dominate the retail industry by keeping a laser-like focus on reducing costs everywhere, particularly in supply chain and distribution. This allowed Walmart to offer consistently lower prices than its competitors ever could. In turn, it steadily devoured market share until it became the giant it is today. It makes up 7.6% of his portfolio, and this gives him excellent exposure to the consumer defense of the industry. What this means is that in the event of a market crash, people would still need supplies. Therefore, they would still need to visit Walmart. As a result, Walmart is arguably the most recession-resistant stock in the Gates Foundation's portfolio. They have also transitioned into e-commerce now, as they've realized people now want to be able to get whatever they want right from the comfort of their homes. Walmart has raised its dividend for 47 years in a row. Stock number 5, Caterpillar. Another thing to note is that Bill Gates absolutely loves dividend stocks. Caterpillar is another company that offers dividends. They've been paying dividends since 1933. They make up 7.5% of Bill Gates' portfolio with a dividend yield of 3.5%. Caterpillar is the global leader in heavy machinery. It has a strong brand with a dominant industry position. They manufacture heavy machinery, mostly to the construction and mining sectors. Their machines can literally be seen everywhere due to their strong international production capability. Caterpillar's competitive advantage is its global presence, which affords its economic scale. For example, Caterpillar can leverage down variable cost per unit, which boosts profit margins. Stock number 6, Crown Castle International. We live our lives daily depending on the convenience and ease the internet brings. Crown Castle is a company that helps provide internet across the U.S. and Puerto Rico. They are structured as a real estate investment trust, or REIT. It operates cell phone towers with small cells where more massive towers are not feasible, and fiber connections for data transmission. The trust owns, operates, and leases more than 40,000 cell towers and 75,000 route miles of fiber across every major U.S. market, helping it to support data infrastructure across the country. It makes up 4.4% of Bill Gates' portfolio and an ever-increasing dividend which currently stands at 3%. It is safe to say it is a very good investment to have. However, unlike the rest of Gates' investments, which have a long history of paying dividends, they just recently started paying dividends as of early 2014. Crown Castle should be quite resilient to recessions, given its place in what amounts to a utility in the burgeoning telecommunications industry. The trust usually performs well during the recession, and I see no reason for investors to be alarmed during any recession. Its competitive advantage is somewhat weak, given it provides a service with a relatively low barrier to entry. But Crown Castle's scale is something its competitors do not have. Stock number 7, ECOLAB. ECOLAB was created in 1923 when its founder, Merritt J. Osborne, invented a new cleaning product called Absorbit, which cleaned carpets without the need for businesses to shut down operations to conduct carpet cleaning. Osborne created a company revolving around the product called Economics Laboratory, or ECOLAB. One of the best aspects of ECOLAB's business is its consistency. Providing cleaning products and services is a very steady business. Customers need ECOLAB's services, regardless of the condition of the U.S. economy. This means ECOLAB is a recession-resistant business. In fact, the company grew earnings per share each year from 2007 through 2010. Not only did the company generate positive earnings growth in each year of the recession, but in 3 of those years, it achieved double-digit earnings growth. This growth came during arguably the worst economic downturn in the U.S. since the Great Depression. ECOLAB's recession performance makes abundantly clear that the company holds sustainable competitive advantages. ECOLAB serves more than 1 million customer locations spread across more than 170 countries. The company is not afraid to spend significant resources on research and development of new products and services. It makes up 3.9% of Bill Gates' portfolio and is also a dividend-paying company, as you've probably guessed. Stocks 8 and 9, United Parcel Services, or UPS, and FedEx. These 2 package delivery services giants contribute to 6.2% of Bill Gates' portfolio. UPS makes up 2.4% of Bill Gates' portfolio with a dividend yield of 4.1%. They are the largest logistics package delivery company in the U.S. They operate in a near duopoly, as their only major competitor to date is FedEx. I would add that although Amazon, or AMZN, is expanding its own logistics business, it remains a customer to UPS as well. FedEx, on the other hand, makes up 2.1% of his portfolio and a dividend yield of 2.1%. Both companies have increased their dividends consecutively for the last 9 years. Stock number 10, Schrodinger Incorporated. Schrodinger Incorporated is a healthcare technology company. It operates a computational platform that aims to accelerate drug delivery, both for external clients and the company's own internal drug programs. Schrodinger conducted its initial public offering in February 2020. The stock currently has a market capitalization of $3.3 billion. Schrodinger has generated strong growth over the past several years due to the growing popularity of its software. Stock number 11, COCA-COLA FEMSA SAB. Coca-Cola FEMSA produces, markets, and distributes Coca-Cola or KO beverages. It offers the full line of sparkling and still beverages. It sells its products through distribution centers and retailers in Mexico, Guatemala, Nicaragua, Costa Rica, Panama, Colombia, Venezuela, Brazil, Argentina, and the Philippines. Coca-Cola FEMSA is the largest franchise bottler in the world. The stock is an excellent way to gain exposure to 2 very attractive emerging markets, Latin America and South Asia. Coca-Cola FEMSA is in a strong financial position with low levels of debt and positive free cash flow. Also, carrying the Coca-Cola brand allows it to generate high margins and enjoy pricing power. This allows the company to raise its dividend each year consistently. Their stocks give a dividend yield of 4.6% and account for 1.4% of Bill Gates' portfolio. Stock number 12, Apple Incorporated. Apple, as we all know, is a technology company that designs, manufactures, and sells products such as smartphones, personal computers, and portable digital music players. They also have a thriving services business that sells music, apps, and subscriptions. It makes up 0.7% of Bill Gates' portfolio with a dividend yield of 1%. Stocks 13 and 14, Amazon.com Incorporated and Alibaba Group Holdings Limited. Bill Gates has a combined 1.3% share in the largest e-commerce platforms in the world. Talk about investing in companies with strong competitive advantages. These two are right up there when it comes to e-commerce. Amazon's e-commerce operations fueled its massive revenue growth over the past decade, while Alibaba has become the Chinese marketplace's most significant retail commerce business. Alibaba also provides technology infrastructure and marketing for small and medium-sized retail businesses, both inside and outside the country of China. Both of these companies don't pay dividends to their shareholders, as many of the companies that make up his portfolio does. Stock number 15, GROUPO TELEVISA SAB. Televisa is a diversified media conglomerate. In all, Televisa operates 25 pay TV brands and television networks, cable operators, and over-the-top services in over 50 countries. In the U.S., it operates Univision. Also, Televisa owns a majority interest in Sky, a satellite television provider in Mexico, the Dominican Republic, and Central America. 0.6% of Bill Gates' portfolio is invested in this company, and they offer a yearly dividend yield of 1.7%. The company is enjoying strong growth, thanks mainly to high economic growth in Mexico and several Latin American markets. The company's strongest businesses are Sky and cable. Other companies that make up his portfolio include Liberty Global Place, or LBTYK, Alphabet, GOOGL, Alphabet, GOOG, Liberty Global Place, LBTYA, Arcos Dorados Holdings, or ARCO, Twitter Incorporated, TWTR, Liberty Latin America Limited, LILAK, Liberty Latin America Limited, LILA. In conclusion, you would see that all of the stocks that make up Bill Gates' portfolio are businesses that have massive competitive advantages, robust business models, and generally they pay high dividends. And these are the significant contributors to Bill Gates' status as the second richest man in the world. It is also important to note that all of Bill Gates' investments are relatively defensive. All of these attributes have made him the second richest man in the world currently. The portfolio tends to do well in most market conditions. Come to think of it, when you own very strong businesses, you will do well in the long run. We hope this list helped you decide what your next investment will be. Let us know in the comments your next buy and why. Subscribe, like, and turn on notifications to never miss an upload from us. See you soon.